Good afternoon. This is Chris Brecher with the Chart Patterns Mastery February 23rd video. What am I looking at today? Well, I'll tell you, I'm still worried about bonds versus stocks. On the other hand, this really bugs me, and that is the American Association AAII Investor Sentiment Survey. Might as well just say it all out loud. As you see in here, and I'll try to expand it for you, last week, the bulls outnumbered the bears approximately 7.3%. 5.3%. I'm adding real well. This week, 17% more bears than bulls. That really bugs me. What's that usually lead to? What that usually leads to is sell-offs get truncated. Exactly how you saw today. That all of a sudden, when it looks like it's Armageddon, they hold. So that's what I'm going to be watching tomorrow. Now, keep in mind that there's a big difference between being bearish and long or bearish and short. I still think there are too many people that are long this market, but I'm not going to overanalyze it. So let's get to the charts. I'll show you exactly what I'm talking about. First, I'm going to make these comparison charts. So instead of the same symbol, I want the same interval. So you're going to see that the YM that looked like it was on the brink of disaster, look at this. I'm going to put it over here on a 4-hour chart. And you're going to see on that it got right to January 2nd in here lows. Right in here. This was January 2nd, and it's the same place. Right here. There. And I'm going to make this a little easier for you to see. There, there, there. And it looked like it completely blew through it. The problem is, and you see that chart right there. You see that chart right there. Now look at the S&P on the right. Yeah, it looks exactly the same. So is there any difference in these two? Well, yeah, there is. The YM has given back the entire gains for the year. So when bonds sell off like they do, it's usually the NASDAQ that is more affected, not the Dow. So the Dow is at its lows for the year, while the ES lows for the year, that's not even the lows. That's only January 19th, and that's 100 points lower. The lows for the year would be where I showed double stuff, right there, 38.26. So now it comes down to, what do you believe more? The sentiment, or that these charts are going to roll over and die, or that they had key reversals today and now they're going to have this. And I'll show you on how I'm going to game it. Right there. Right there. Now you can see on both of them that if they can get over that, this could go to here. Right in there. About 30 more points. This could get up maybe to here. That's about 290 points. That's if. These are all big ifs. Now, what'll be the ifs? Well, one more thing. One of them is the NASDAQ. Where's the NASDAQ in this whole group of things? Yep, it got right to resistance twice and sold off. It held where it needed to hold. That's the good news. What's the bad news? The bad news is it's not even close to where it started the year. Look at this. Right there. That's January 2nd levels, and it's all the way up here. Now, usually, like I said, the bond market and the NASDAQ go together. So on the right now, I'm going to show you the NASDAQ. And as you see, the NASDAQ lows would be the bond lows, it's on the lows. That's like here. Now, you might say, yeah, but they don't always correlate. Well, I beg to differ. Look at this right here. You had this low at the beginning of the year, and the NASDAQ kept going. Low in the bonds, and they kept going. You had that next rally in the bonds, and you had that next rally in the NASDAQ. That's all fine. The problem is that the bonds kept going down while the NASDAQ really is futzing around here. Now, in the bigger picture, yeah, this could be a big old head and shoulders like you see. If it doesn't hold here, it could go down by this amount. That's about 500 points. I'm looking at this head and shoulders possibly. So I'll show you what, make it a little clearer for you. I'm going to take off all of these for you. And this is what I'm looking at. That, and the trend line. So then it comes down to, here we go again. What do you believe? Do you believe the sentiment? Do you believe that this could go and touch this and maybe work off some bearishness? It comes down to the bond market again. Broken record. I know it's a broken record. Can the bonds hold this level? Them holding today really helps sentiment in other indexes. So where could the bonds go? Can I draw some kind of trend line that's halfway bullish? Yeah, you could draw right there. Will it get far? Probably not, because there's so many layers of resistance. This could get to 125.29. That's all at 29 more ticks. And it still would be way down here compared to the NASDAQ. So then it comes down to, if these sell off, then I have to think the NASDAQ is going to fulfill its head and shoulders objective and get down to that 11.7 level. So tomorrow, PCE coming out. Let's see what happens. If the bond market has a rally up, then we'll see what the NASDAQ is made out of. If it refuses to go up, or Bitcoin refuses to go up, darn right I'm going to short them. But I have to have tight stops because of the sentiment is pretty negative. So that's where I am right now. When it comes to overall groups, all of them seem to be moving together. So it's going to be a slave to the bond market. Everybody take care. Have a great night. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.